All right, it is Justin Glover with Glover Home Group, and I'm here with Karri Hartman with Finance of America mortgage expert. Is that fair to say?
I don't know if that's legal to say.
Mortgage expert, we'll say it, and professional
Financial
cookie maker,
advisor, mortgage advisor.
mortgage advisor, and professional cookie
Yes.
maker. Have you been making a lot of cookies in quarantine?
No, I have been too busy to make cookies. And if I make cookies, now it's only two of us here to eat all of them. So I'm trying to avoid making
I don't know if that'd be a problem with Aaron.
No, I don't think it would.
Well, anyways, I just wanted to come together for a few minutes and talk about what's new with the mortgage industry and what's the same, and pick your brain for a minute.
Perfect.
So
Well, so what's new is that credit scores have changed a little bit because of COVID-19. Uh, we have increased our minimum credit score, which means you have to be a slightly better borrower than before.
So what's the minimum now?
620 is our new minimum credit score.
Okay.
This is a temporary thing. We're hoping that eventually that will change again once this kind of settles itself out. But for now, that's what we're looking at. They're also looking a little bit more strictly if you're a first-time home buyer that you are renting now, or that you've got some reserves in the bank, or have a minimum credit score. So there's a couple of extra overlays there as well. Ideally, we just want to make sure that if someone's buying a house, they're going to be able to afford those payments, that they're not going to get over their head.
So that brings me into a question I'd written down, but it's a good time to ask, I guess. If someone wants to, like let's say they're borderline, in the 600s, 650, and they want to go on and try to get pre-approved, and will that affect their credit score doing the pre-approval?
Yes. So when we do a pull, it is a hard credit pull, which means that there can be a 3 to 5 point hit to their credit score. But what that does is it allows us to open up a tool that I can do. It's called a what if simulator, that I can say, what if we pay this card off? What if we apply for a new card? What if we add a card that is in existence that for some reason isn't showing up? And it will give me a projection on if that's going to stay the same, if it's going to improve, or if it's going to harm their credit score. So we can then provide them some very valuable information on what to do to get to the place that they want to be. And sometimes that's just as simple as they may be pre-approvable now, but they may want to get to a different program or to a better score or something like that.
Yeah.
So work with them on that.
So realistically, that 3 to 5 potential point hit, like most of the time you can more than make up for it by getting them in the program and knowing where they're at and what you can do to get them bumped up a little bit.
Definitely. And those credit reports right now, that's another change that we've had. Previously, they were good for 120 days. Now they're good for 90 days. But so that gives us a pretty big window. So if they're in a place where they're ready to go, then we're good for 90 days. They can go out and start looking as soon as they've been able to provide us their documentation. So we do a true pre-approval where we're going to collect all of their income and assets up front to make sure that everything's in line, so that when they're out shopping for that house, they can do it with some confidence.
Okay, great. So what are rates like right now?
Fantastic. Rates are still in historic lows. So we're talking in the 30-year terms, in the threes if they've got decent credit. In lower terms, even lower than that. So if you're looking at a 10-year or 15-year, rates are fantastic. So it's definitely a great time to be looking at things.
So I know this is going to be an impossible question for you to answer, but I'm going to ask it anyways. Let's pretend that someone is not considering maybe moving, but they want to consider doing a refinance. What would you say like the minimum rate would be for them to at least like look into it?
That's the hard part to determine. So it's going to be kind of individual basis because everybody's situation is different. So someone may only drop a half a point, but they have PMI, private mortgage insurance, that we can get rid of.
Okay.
In instance, it might make sense for them to refinance. Whereas if someone doesn't have PMI, Depending on their loan size, a half a point might not be enough. So that's something that if they want to call and have a conversation without even pulling credit, if they can give me some basic information, I can do some calculations for them and let them know if it's going to make sense or not. And we can discuss what those options are. I had a buyer that I just did a refinance on. We got an appraisal waiver, meaning we didn't even need an appraisal. And we were able to drop their rate substantially and drop them down by 10 years on their term. And their payment is actually less than it is right now.
Wow.
Yeah. So
yeah, I knew this was going to,
that it can make sense.
I knew this was going to be impossible for you to answer because I just asked you the same question and you went into like a 20-minute calculation on the phone. And then I was like, I thought it was going to be an easy answer. So definitely
it's
like,
because there's so many factors, you know,
right.
And like I said, it's like if you've got that PMI or don't have that PMI, if you're looking to shorten the term or not. Rate and term is always the best solution. Cash out might make sense for some people if they've got a bunch of high interest rate debt. Even though they're maybe extending that term out, it still might make more sense for them. So those are all things that we discuss and take a look at and see what the best option is for each individual.
Yeah. And I'm a little distracted because I'm trying to make it so half my face doesn't go away with this virtual background. But it's still better than what's
I thought you were just trying to look thin today.
Yeah. So that's, I knew that's kind of how you're going to answer it, but that's the whole point of asking the question. So people can contact you and pick your brain and go over the scenarios and what they're thinking, you know, and it's going to depend on whether they're going to sell, you know, or move in a couple years or not anyways. So we already kind of talked about some of the big changes with like credit score and length of credit and that sort of thing. What are were there some programs that you were doing before that went away or that came up? Or
Yeah, unfortunately, most of our zero down or low down programs are temporarily suspended. There is some talk that some of them will be coming back sooner than others, hopefully sooner than later. We still are doing the rural development loans. Other than that, we're doing the conventional first-time home buyers. 3% down is going to be the minimum for a conventional first-time home buyer. We have FHA still, that's minimum 3.5% down. So there are still some low down programs. You definitely don't need the 20% down to buy a house. It's just a matter of what program is going to work based on your scenario, your credit score, things like that.
Okay. So like if someone was, let's say they were considering buying a house, you know, this spring, and that's obviously been put off for a while. Now let's say their goal is the end of the year, you know, to purchase a home or maybe in the fall. What are some things that they should be doing between now and then to make sure they're in the best position? And do you anticipate those programs coming back by then, or should they really concentrate on getting their down payment?
Obviously, depending on what happens with
Right.
COVID thing and how long that this extends, I do expect that at least some of them, maybe not all of them, that'll be determined, I guess, based on what's happening with the markets. But I expect that at least some of them will come back. And I would say, let's get started now, especially if they're not aware of it. Let's get that credit pulled. Let's start having those conversations. Let's see what's out there. If you haven't looked at your credit, or if you're only looking at it on, say, like a Credit Karma, one of those soft credit pulls is, number one, only focusing on one bureau, and number two, maybe missing things. So not all investors report to all three bureaus. So you could have something out there you're not aware of. So it's a great time to just get started, have those conversations. We start looking at things like, we have the conversations about their bank statements. When a lender looks at your bank statements, they look at a 60-day window. So if you've got a lot of money going back and forth, I see a lot this method that I'm hearing, people are trying to pay cash for things. So some people are opening multiple checking accounts and moving money back and forth and back and forth and back and forth to like distribute their accounts into, say, envelopes. That is not fun to try to track as a loan officer and an underwriter, and it's going to require a whole lot more information from the borrower. So if I see things like that are occurring, we'll start to have those conversations that maybe we want to get our down payment in one account and let it sit there. or we want to use one account to pay our daily bills, and we want to have another account where maybe our paychecks get deposited and the paychecks just build up to the money that we're needing. So we can give them the estimates to know how much cash that they're looking at to close, based on what they're looking for, how much of a house that they're looking for, what they want their monthly payment to be. So we can start having those conversations and getting that plan in place so that when that house comes along, they're ready.
Okay. That's what I would suggest as well. But
Good.
people don't always listen, do they?
No, they don't.
But if you're sitting around right now and you want to buy the end of the year, I mean, like, make sure that when the time comes, like, it doesn't get delayed another 6 months, you know, that less.
Absolutely. And now is a great time. I mean, even through COVID, I'm busier than I've ever been, to be honest. We're closing a lot of loans, and there is still multiple offers coming in on some of the houses that I see. So having that solid pre-approval is an awesome first step, because that's something that I can make the call to that listing agent and let them know that we've done that background and we know that they're a good buyer. We've maintained that they are currently actively employed or being paid, because something that is a requirement right now with this COVID thing. Unemployment unfortunately doesn't count. A couple of exceptions, like if they're traditionally seasonally unemployed and we can show a history, that is the one main exception. But other than that, if they're like at home but they're being paid because their employer got the PPE, then that's something that we can potentially still use as long as their employer can confirm that they're still receiving active pay.
So that brings up another question that I had written down. So let's say someone is laid off right now, and they're totally planning on going back to work. They're ready to go to look for a home when they go back to work. How long will they have to wait before they can purchase once they get back to work?
So a little bit of that depends on how they're being paid. If they
Okay.
are a salaried employee, for example, they just need to be employed. If they are an hourly employee, that's a standard like 40-hour a week full-time employee, same thing, just need to be back to work. If they are a commission-based or a bonus-based or something like that, we may need a little bit larger of a picture, and part of that will depend on how long that the gap is in between. So depending on how much longer that this goes, that could come into play. But typically we're looking at usually the 6-month mark is where it becomes a problem. So hopefully this is going to be over middle of May and we can all get back to, semi-normal life again.
Sure. Change of direction here, but what programs are good, I guess, or what would you recommend if there is someone who wants to purchase, but they currently own a home and they're just nervous about putting their home on the market and selling before they find the next one, but they need, where I'm going with this, but they need the money from the sale to purchase. What type of things have you done, or what would you recommend in that case?
Yeah, so again, that's going to depend on their particular situation, but things like bridge loans are out there. One of the other things that I've talked to about with some of my buyers is that maybe we look at one of the lower down options if they have the ability to obtain that down payment from another source. Maybe we look at, instead of financing them with 20% down, maybe we look at that 5% down option to go ahead and get them in, as long as they're able to qualify with both payments. And in that scenario, then they could look to sell that after the fact. Obviously, there's some buyers where that unfortunately won't work. Then what we could do is look to do either a contingent offer, which may or may not be acceptable depending on how long the house has been on the market, or they get their home sold. And so the only thing that it's contingent upon is the closing. And that is obviously a stronger scenario for a seller to be looking at. And with that, we can close those loans back to back on the same day. So you could sell your house in the morning and buy your house in the afternoon.
So I would imagine you mentioned that maybe there's some people who are, instead of putting that 20% down, are just putting, that 5% down. I'd imagine with the lower interest rates, that's becoming more and more common because they could use that money towards other debt payoff or.
Yeah, for sure. And I just had a person who's an investor ask about it, and I made the suggestion that we look at that route. And when they went back and did their numbers, they realized that they could use that other money to buy more investment properties instead. And it was a much better return on their investment to go that route, even though they are going to be paying PMI or private mortgage insurance on their house with being as low as they are. And PMI is also dependent upon what loan to value that you're going to, how much you're borrowing versus how much that you the home is worth, and credit score. So the higher the credit score, the better. So again, one of those scenarios where if they're close, we might be having those discussions, even if they are pre-approvable, of how to get them to that next category.
Okay. My last question that I have written down is, let's pretend that this all ends in the next couple months. Do you see anything that's changed the last couple months that's going to stick around, or do you think we might just start going back to, as far as mortgages anyways, start going back to kind of how it was at the beginning of the year?
I think that from everything I've read and everything I've seen, real estate is going to be kind of the security that's going to bring America back. So I've seen little to no slowdown in my business. If anything, I've probably had my best 3 months ever. And I'm not doing a lot of refis. There are some loan officers out there who are having crazy months because they're doing a ton of refis. I still have lots of purchase business. I think that with everything I'm seeing, people are still out there that, people are adapting. We're virtually shopping for homes these days. We're doing our tours via Skype or Zoom. So I think that we're going to see this market bounce back very quickly. I know that there's a flood of borrowers out there that are waiting to go back to their jobs, or they're waiting to for more houses to come on the market. There are still some people who don't want people walking through their houses because that has opened up now, that they can come through with their inspector. But some people still feel a little fearful of that. So once these restrictions come off and it's open again, I think that we're going to see this come back. A few things like the higher risk things, the zero downs, those might take a little bit longer. But I think that we're still going to be in a good rate market. And I think that I think we're going to be in a great space.
Great. Do you have anything else you would like to add, or any questions that you have for me?
What is the Glover Home Group doing to adapt for this situation?
Well, it depends on which member of the Glover Home Group you're talking about, but in general, I have quite a few people that are just waiting, ready to go, expecting that the restrictions get lifted soon. And if not, then we've adapted with Zoom and virtual showings, and we have virtual staging, and can still do things. But we've just been kind of advising people to make the best choice for them. And if they don't need to sell or need to buy right now, they maybe should wait. But if they do, or there's an urgent need, there's still homes being sold quickly, and for multiple, like you said, some with multiple offers. Just depends on everybody's specific need and scenario. So, and I am personally trying not to just eat and drink myself silly, and trying to exercise and all that sort of stuff. But we're definitely going a little crazy, all cooped up. So hopefully it opens up soon.
I'm just super thankful that they let us vote again, because I was ready to throw my husband into the lake. I'm glad that she opened that piece back up for my sanity.
Yes, I have, my sanity will be potentially golfing, at least walking, but I've been riding my bike and that sort of thing. And kids are being pretty good for the most part, but they're definitely ready to get out there again. So
When you get them to bed by 4 o'clock, right?
mhm. Well, thank you so much. It was very informative. And as anybody who's worked with Karri before knows, she will go into as much detail as you need and run as many scenarios as you need to find the best program and product and situation that works best for everybody. So get in touch with her if you have any questions about your specific needs. Otherwise, we'll both be ready to help you.
All right. Bye, everybody.
Thanks so much.
Thanks.